XRP billions are gone from Levi.
Army, you guys need to listen up right now.
Are billions really gone? Yeah, the billions are liquidated. They're gone off the market. Maybe it's more like a couple 50 million, but 100 million, but it's definitely like a hit. You know, it's something noticeable. But in the long run, probably not. A lot of these people come back to the markets.
Because billions of dollars are gone, and the Fed just absolutely shocked the world with their latest piece of news that they released. Some data has come for you wonderful people back at home. And so I want to talk about the volatility, because you guys have probably noticed XRP, Bitcoin, Ethereum, these assets have been bouncing up and down like crazy over the last few days. And I want to talk about what's going on and why this volatility is actually likely to get even more crazy from here. We just saw over $22 billion worth of Bitcoin and Ethereum options expire today. This means a lot more liquidity is going to be.
Yeah, so this is just the short-term markets, right? The long-term markets, it's going to be fine. Like, you know, we saw this every single time, like every 3 months. This is what the stuff that happens. But what if this time is different?
Bouncing around these markets, and yes, the volatility is not going to end. Now, what most of you are probably wondering, does that mean more downside? Does that mean more upside? I'm going to get into that very soon based off of other things that I'm seeing. We'll talk about that very soon. We're seeing some pretty interesting things happen when it comes to borrowing. Tech companies, in fact, are borrowing money at a rapid pace. What we're seeing is tech companies have raised over $157 billion.
Now, this is the thing that truly worries me. When they're borrowing lots of money, you got to repay that money. And that's what we saw in 2008. Now, I'm not saying that, but again, if they can pay it off, that's great. A lot of people are saying, you know, tech companies will not, you know, be sustainable in that way. I'm definitely hoping they are, though. That would be amazing.
$1 billion in the U.S. public bond market year to date, which is the highest year to date total since 2020. Now, I don't think I need to remind you guys, but the 2021 bull run, right before we saw, of course, the all-time highs for Bitcoin, XRP, Ethereum, during the last cycle in 2021, had a very similar trend. You can see tech borrowing went absolutely through the roof in 2020.
So that's the issue. But 2020 was a bit different, though, because a lot of these businesses were closed. Tech companies can actually make money now. It's not like inflated money, right? So this data is a bit off, in my opinion, at least what I think so, unless I'm missing something. Tech companies back then also had a financial boom. And yeah, we did have, you know, a sudden drop, but it went back up.
And then, of course, it went down a little bit in 2021. But you can see this is actually when we hit the all-time highs. And when you think about it, this makes a lot of sense. Basically, what is happening right now is tech companies are borrowing money, they're investing that money, they're building massive AI infrastructure, they're investing into blockchain technology, you name it. Then the profits will follow, which will make even more investors want to purchase these assets, which will, of course, drive them to becoming new all-time high numbers. And then, of course, the Fed sometime probably in 2026 or 2027 will start raising rates again, which of course will make that bubble pop because the liquidity is going to start getting drained out of the market.
What if they can pay it off? Now that's the question I have. If they can pay this off with the money they have, with the profits they're generating, which they couldn't sustain those profits in 2020, because how could they get revenue if people could not afford tech? If they did not have a job, people did not have a job, they couldn't go to work. You know, they could not pay off the tech, which could not make sales. It's going to be totally different in 2025.
So once again, essentially what I'm saying is I think it's very likely we're going to hit
Ms. Drunken Don't
2026, followed by, of course, a massive pop once the Fed starts quantitative tightening or raising the interest rates. Now, nobody knows exactly when the Fed is going to raise or lower rates, including the Fed most of the time, because they're relying on information that is still...
I mean, it's pretty obvious that what's hinting at they're going to cut another interest rate, and Levi did say that after, 3 months, we will see that effect
coming in every single day. But what we absolutely can do is look at what the Fed is currently saying and look at what the data currently is to get a pretty good idea of what they're going to continue to do. It's abundantly clear that there's a lot of money being available for tech companies right now, which is a sign that business is going to thrive over the course of probably the next 12-ish to 10 months.
That's good news.
August PCE inflation, which is the Fed's preferred inflation measure, has risen to 2.7% in line with expectations. Core
That's
PCE
good.
inflation was 2.9% in line
I mean, if it's in line, this is good. If it raises more, that's when like the government gets scared.
with expectations of 2.9%.
So the economy is literally better than everyone predicted. So I don't think it will be the same crash as 2020.
PCE inflation is at its highest since February of 2025, yet the Fed is going to keep cutting rates. What this essentially means is the price of your goods and services is likely to continue to rise at a fairly unsustainable rate, which is going to drive even more people to invest their assets as the dollar continues to erode in value, which, by the way, the US dollar is having one of its absolute worst 12 months it has ever had in history. And it's only picking up from here because the Fed is going to continue to cut rates. And so, yes, more liquidity is going to enter in, but it's ultimately going to result in some pretty bearish outlook for the US dollar. So people need to get out of the US dollar. They need to go into the stocks. They need to go into the crypto in order to preserve their capital. That is going to continue the more the Fed cuts rates. And the Fed has announced they see 2 more interest rate cuts by the end of this year, which means more and more money printing is going to be happening as they liquidate these treasuries. Another interesting thing, and this is a lesson that I learned in investing that made me so much money. Like, it literally changed my life. Hopefully it'll change.
Investors sold 4 billion in US equities last week. I mean, because the markets are good, they're going to probably keep selling. If they're making a lot of money, they're going to take massive profits. This always happens, guys. Again, stocks are up, of course they're going to take profits. And yeah, I mean, it's pretty safe to say take profits in that sense.
Change your guys' lives too. When everybody is bearish, be bullish. When everyone is bullish, be bearish. What is the sentiment? What are people doing with their capital right now? Well, this is extremely interesting. Professional, retail, and hedge fund investors sold $3.8 billion in U.S. equities last week. Institutional investors sold $1.4 billion, reversing the net selling for the first time in 3 months. This brings down the 4-week average of buying down to $1.6 billion. Hedge funds were also net sellers at $2 billion, following $2.9 billion the prior week, pulling their 4-week average down to $1 billion.
So these sales are not that scary to me because, again, if there's lots of profits, these billionaires and stockholders and everyone else will probably sell. They will not sell in 2022.
Meanwhile, retail investors sold $300 million, posting the third consecutive weekly outflow after $800 million in the preceding week. Wall Street and Mainstream are cashing in gains. But there is an institutional level of buying that is happening right now that many people are not paying attention to. You can see the net gains right here versus the outflows right here.
Will they buy XRP as well? That's what I'm wondering. Like, would this mean that they're it's mostly say stocks and equity ETFs, but will they buy XRP after like the XRP ETFs come in? That would be amazing.
Institutional right there. So basically, the vast majority of people right now are selling. And they are selling way too early because the Fed just cut rates. But that's what most people think. Most people think the Fed cuts rates. All right, the markets have peaked right when the Fed cuts rates. I'm going to sell right now as soon as the Fed cuts rates. It doesn't work like that. I've covered this so many times on my channel, but I'm here to tell you guys it takes at least 3 months for that liquidity from the Fed cutting rates and printing money for it to enter into the markets. And
so that's what I'm worried. Like, is this going to be a delayed pump of December?
Generally, 20 out of 20 of the last 20 times, actually. So this is like a 100% success rate. 20 out of 20 of the last times that the Fed cut rates, within the S&P being at a certain level of all-time highs, which it is right now, the stock market closed higher 12 months later, and so did the crypto market, for all of the examples that we do have on record. So if smart institutional buyers are buying over the last 4-week average, retail and everyone else is pretty much selling, I think it tells a pretty compelling story. Most people are bearish right now because they don't understand the fundamentals. They don't understand what's going to happen. They don't understand the money is going to come back in. There's a very small subset of people that are very well trained on the markets. It's quite literally their job, who are basically buying. But yeah, it's going to get very interesting here. And I think a lot of people are going to get caught completely off guard. Hedge funds included. The institutions probably are going to be the only ones who will do very well here. There's going to be a very small amount of retail investors that will do well as well. And so naturally, with all of these options,
I kind of agree here. I feel like the institutions, like I'm going to trust institutions. I don't know why hedge funds are selling though. That's what scares me. But if institutions are buying these stock equity ETFs, I'm going to go on the way. If retail is selling, I'm going to go on the way and trust them, right? I don't know what the blue line is or what the very bluish line is. That's what I'm worried about. What are they buying? What are they selling? So maybe they're selling stocks and buying equity ETFs. Is it because equity ETFs are getting listed now?
probably are going to be the only ones who will do very well here. There's going to be a very small amount of retail investors that will do well as well. And so naturally, with all of these options expiring, as we went in earlier here.
So that's pretty obvious. Like this is just day trading. This is normal for profiting and everything like that. So won't be too afraid.
We know the volatility is going to come. So short term, I want to make it very clear. It's possible that XRP touches new lows. In fact, our current bottom support line is somewhere around 256 at this moment.
Everyone is calling 256. I feel like if it drops, it's not just going to magically stop at 256. It will go even lower. But then again, it's time